Hello and welcome to the Sand to Pearls market commentary. Market week ending Friday, September 13th, 2013. It was a Friday the 13th, but as far as I know, nothing too terrible happened. So all's well that ends well. Market breadth. With this past week's market advance, our bull-bear point and figure ratio rose from 1.07 to 1.40, advancing further back into bullish territory. The total count of securities in bullish or bearish patterns increased 2% to 1,955. The count of bearish stocks decreased 12%, while the count of stocks in bullish patterns increased 15%. The Sand to Pearls PNF Market Breadth Summary Chart shows us a market now 2 consecutive weeks in bullish territory. Paid subscribers have access to the Excel data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership, and clicking Sign Up. There is available a free 2-week trial subscription for those who are interested. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 147 points for the 6th rise in 16 weeks. At a positive 182.54 points, it continues below the November 2010 top, the January 2011 top, the November 2011 top, the February 2012 top, the September 2012 top, the March 2013 top, the May 2013 top, the July 2013 top, but above the March 2011 bottom, the June 2011 bottom, the August 2011 bottom, the December 2011 bottom, the May 2012 bottom, and the November 2012 bottom. Market gauge volume analysis. In this week's volume analysis, the Russell 2000 ended in distribution mode. In the last 2 weeks, it had 4 accumulation days and 3 distribution days. Of the other indexes, both the S&P 500 deposit receipts and the Diamonds Trust ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Russell 2000 ended in accumulation mode. Momentum. As we anticipated last week, on Wednesday, September 11th, the CCI 20 had 6 days above zero for a change of trend. It is now outside the plus or minus 50 range for a valid zero-line reject signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 31 weeks ago, while the daily CCI 20 began a Woody's uptrend this past week. After last week's zero-line reject exit trade, the CCI 20 weekly rose back above the plus 100. We await a return to the plus or minus 50 range for a valid zero-line reject entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and only 2 of the bottom 5 are negative. Bullish, semis, and networkers remain in the top 5. Disk drives and brokers have entered the top 5. Gold and silver continues to lead the bottom 5. Oil and oil services have left the top 5. Banks have left the bottom 5. Bearish CompTech remains in the bottom 5. Focus this week, World Bank sanctions at 7-year high. It appears that cleanup is happening. Note, however, this comment from whistleblower Karen Hughes, who adds additional information to the story. And on September 15th, Karen Hughes wrote, "Too bad that the Financial Times has failed to report the U.S. Congresses, UK parliaments, European parliaments, and World Bank whistleblowers' attempts to clamp down on corruption at the World Bank." And the story continues on with many links. I'm sure that you will find it interesting. As always, we thank you for viewing this week's market commentary video and hope that you have a great week coming up. Happy trading!